Hey everyone, welcome back to Corporate Decoder. Today we are diving into Evercore Incorporated's 2025 annual report. And let me tell you, their numbers are showing some serious growth. It is like they're saying, hold my coffee, we're about to break some records, before we jump in. If you are all about getting the real dirt on what these corporate filings actually mean for the companies you care about, make sure you hit that subscribe button. And hey, our Discord community is buzzing with insights, link in the description below if you want to join the conversation. So Evercore Incorporated, a name you might have seen pop up in the financial news, has just dropped its big annual report. The 10K, this is where companies lay it all out for the world to see, detailing not just their successes, but also the risks they face. For the fiscal year ending the 31st of December 2025, they've reported some pretty eye-catching figures, especially in their core business of investment banking. Let's talk about the money. Their total revenues for 2025 hit approximately $3.88 billion. That is a hefty increase of 29% compared to the previous year. What is driving this? Well, their investment banking and equities segment, which is the main engine of this company, saw a massive jump. Advisory fees, which come from advising companies on big deals like mergers and acquisitions, shot up by a whopping 34%, reaching over $3.26 billion. That is a huge chunk of their income, and shows they're really busy helping clients navigate complex financial landscapes. This surge in advisory fees means Evercore's bankers and advisors were in high demand throughout 2025. It suggests a very active M&A market, or perhaps Evercore winning a larger share of the deals they pursued. Compared to last year's $2.44 billion in advisory fees, this is a substantial leap forward, showing a strong performance in their primary revenue generating area. When you look at their net revenues after accounting for expenses like interest, they landed at nearly $3.86 billion for 2025. That is a solid 29% increase year over year. This means the company is bringing in significantly more money from its core operations, which is a clear sign of business growth. Now, a big part of any service business, especially investment banking, is its people. Evercore's employee compensation and benefits expense jumped to $2.5 billion in 2025. That is a 27% increase from 2024. This makes sense because when the company is doing well and revenues are up, they typically reward their employees more through bonuses and other compensation. It also reflects the cost of acquiring Robey Warshaw, a business they bought in 2025, which naturally brought in new employees and associated compensation costs. Despite the rising cost, it is important to note that their compensation expense as a percentage of net revenues actually slightly decreased, showing they managed to grow their top line faster than their compensation costs increased, which is a good sign for profitability. Beyond salaries and bonuses, their non-compensation expenses also went up by 20% to over $565 million. This increase is driven by several factors, including more spending on technology and information services, likely to support their growing operations and research capabilities. Higher occupancy costs also contributed, probably due to expanding office space. The acquisition of Robey Warshaw also added to these costs, with integration and transition expenses reported. With all these changes, let's look at the bottom line for their main segment, investment banking sub-IAMP equities. Their operating income for 2025 surged by 52% to over $770 million. This is a really impressive jump, showing that the revenue growth significantly outpaced the expense growth, leading to a much stronger profit picture for this segment. Looking at the total expenses for this segment, they were just under $3 billion, an increase of 25% compared to the previous year. While expenses did go up, the revenue increase was even more substantial, which is why operating income saw such a healthy boost. Now let's shift gears to their investment management segment. This part of the business, which includes wealth management, brought in about $88 million in net revenues in 2025. That is a 9% increase from 2024. While smaller than their investment banking arm, it is still growing steadily. The revenue growth here is largely due to an increase in assets under management, which the report states grew by 12% to $15.5 billion. Specifically, their wealth management operations saw fees rise by 10%, correlating directly with the growth in assets they manage. This segment is doing well, showing a consistent upward trend. Expenses in the investment management segment also rose about 13%, a bit faster than revenue growth. Employee compensation and benefits increased by 14%. and non-compensation expenses went up by 11%. This means their profit growth in this segment wasn't as dramatic as in investment banking. As a result, the operating income for investment management actually decreased slightly by 5% to $19 million. This is a deviation from the strong growth seen in their other segment, but it is not a cause for major alarm given the overall positive performance of the company. When you put all of this together, the total net income attributable to Evercore Inc. shareholders was a remarkable $591.9 million. This is a massive 56% increase from $378.3 million in 2024. That is a truly outstanding performance, indicating that the company is not only growing but doing so profitably. And for the investors, diluted net income per share, a key metric for profitability on a per share basis, jumped to $14.05 from $9.08 in the previous year. That is a 55% increase, showing that the company's success is directly translating into value for its shareholders. Now, every company faces risks, and Evercore is no exception. They highlight that difficult market conditions can really hurt their business, especially by reducing the volume and value of transactions in their investment banking Sudiamp equities division. Factors like economic downturns, rising interest rates, political uncertainty, or even global health emergencies can all impact their ability to conduct business and consequently their revenue. They also point out that their growth strategy relies heavily on attracting and retaining top talent, and losing key professionals could significantly harm their relationships with clients and their overall financial health. It is a constant battle to keep their star players happy in a competitive industry. Another significant risk they call out is cybersecurity. They rely heavily on its systems for sensitive client data, and any breach could lead to severe financial losses, reputational damage, and legal liabilities. They're investing in security, but the threat landscape is always evolving. On a lighter note, they mention their principal offices are in leased spaces, notably in New York and London. No real estate ownership here, which might be a deliberate strategy to keep overhead flexible. Looking at their stock, their class of common stock, traded as EVR on the New York Stock Exchange, has seen some activity. They've been actively repurchasing their own shares, which can be a good sign that management believes the stock is undervalued, or as a way to return value to shareholders by reducing the number of shares outstanding. In 2025, they repurchased nearly 2.4 million shares. This shows an ongoing commitment to managing their share count and potentially boosting earnings per share. The market value of their stock held by non-affiliates was a solid $10.4 billion as of mid-2025. This indicates a substantial valuation in the market, reflecting investor confidence in the company's performance and future prospects. From a Warren Buffett perspective, Evercore seems to be performing strongly in its core business of investment banking, which is driven by deal volume and advisory services. Their growth in revenue and income is impressive, and they are managing their expenses well enough to translate this top-line growth into significant profit increases. The acquisition of Robey Warshaw is a strategic move to expand their global reach, particularly in the UK, and demonstrates a proactive approach to inorganic growth. However, the reliance on deal flow and key personnel are inherent risks in this industry. Their ability to continue attracting and retaining top talent will be crucial for sustained success. The focus on cybersecurity is also essential given the sensitive nature of their business. Overall, Evercore Inc. is showing robust financial results for 2025, fueled by a booming investment banking environment. They are expanding their reach and growing their profits, but they remain mindful of the inherent risks associated with market volatility and the competitive landscape for talent. Alright, that is our deep dive into Evercore's 2025 report. What do you think about their performance and their biggest risks? Let us know your thoughts in the comments below. If you found this analysis helpful, please give this video a thumbs up. It really helps the channel. And if you want more breakdowns of what these complex corporate documents mean, make sure you subscribe. Don't forget to join our Discord community linked in the description for even more discussions and insights. Thanks for watching, and we'll see you in the next one.